This is your real estate syndication show. I'm your host, Whitney Sewell, where our guests today, they're analyzing over 800 deals or opportunities a year. And I wanted to know, what are they looking at right now? Are they buying? What's their plan right now? And Joe Berko, he shares just that. He's nationally recognized inspirational entrepreneur with over 25 years of success. In profitable investments, ethics, generosity. He launched Astor Realty Capital in 2015 with two of Berko and Associates directors. By 2022, Astor's growing real estate portfolio spanned over 3.5 million square feet, and including investments in residential projects, logistics centers, medical offices, hospitality, and urban retail. In 2020, Joe partnered with an offshore media outfit to create urban real estate and establish an educational platform, which we're going to try to link in the show notes as well. It's called the Real Estate Masterclass. But you're going to hear Joe dive into his background, which is pretty incredible, to getting into this space. He did numerous things in New York City as well. He lived there in some of the toughest times in real estate. But then, how that prepared him for where they are at today. But you're going to hear a crucial skill set that he has honed in on himself and tried to develop that's helped him in a big way. And he's going to tell you something that's going to help you to also develop that in yourself, or something for you to look up and learn about. But he's also going to talk about what he's doing right now in the current real estate market. Should you invest? Should you not? You're going to hear that today from Joe. No matter if you're an operator or a passive investor, you are always evaluating risk. You're always trying to determine, what is the right investment for me, for my team, or for me personally as a passive investor. Our guest today is an expert in just that. And we're going to dive into those expertise today to help you learn, what should you be doing today? What are the risks you should be assessing? Joe, welcome to the show.
Thank you, Whitney. Great to be here. Thank you for inviting me.
Yeah, honored to have you on, honored to meet you. I know you're going to help our listeners a lot today, and myself, as we think through, being that passive or the operator, or evaluating the risk, and we'll learn how you do that so well. Let's back up a little bit. Who's Joe? Give the listeners a little more color about, who you are, your business, what you're focused on. Let's dive into how you all are, evaluating those risks as well in a few moments.
Wonderful. Happy to do that. So, who's Joe? Joe is an immigrant who got off the boat, so to speak, some almost 30 years ago, and spent the entire time in the United States, mainly in New York City, the most competitive market, operating in real estate. I started in 1995, got into the real estate, got myself a real estate degree, but was very passionate about it. When I graduated, it was sort of like around 9/11. The city was sort of not in the best economic shape. There weren't many jobs. I've taken a position as an analyst in a financial company and moved over to sales and sort of started from there, in placing debt on sort of loan structures on commercial properties in New York City. Times were tough. Banks were obviously pulling back, not a lot of capital. The city was in quite, question mark as to where things are heading. Downtown was a mess. I was living in downtown. It wasn't fun times, but he taught me a lot in those years. Certainly, I've learned a lot. There's a saying, smooth seas don't make skilled sailors. And so at this point, I'm close to about 30 years of my career in real estate. And I have to say, I've gone through maybe 5 different cycles, came out of a cycle when I started in 1995. It's those moments that actually defines your career. That can actually define you as an investor as well. And so I've done that for a good number of years and then went into the advisory work, created my own firm, Berko and Associates in New York City. We've had over 20 associates with me, and we've done some, multiple beautiful assignments, from raising capital for public companies to selling very large, office-sized transactions. My largest transaction was just shy of $200 million. Actually got me a number of nominations over the many years. Something that sort of like very early on for my first and second transaction, I sort of like encapsulated or crystallized for me sort of like how to operate in the market was keep your name straight and always do the right thing. And something that I've learned over the years, it's kind of like a marathon. If you're looking for a sprint, you're going to be looking for all sorts of shortcuts, and that may not lead to the best possible path. Not that there's plenty of people that like the possible short path, but it wasn't mine to take. And so, it was kind of like, sticking to what we know, doing the right thing, not always the easy thing, but certainly the right one. And so I built a reputation over many years. Also had the pleasure, the honor to be on the board of the state of New York. I was nominated by Governor David Patterson. We insisted, in fact, that I sit on the board of the state of New York for real estate matters. And then from then, was supposed to be a 2-year nomination, ended up doing it for about 9 years. The next governor asked me to stick around and do that as well. So that was interesting to see the political environment, see the political side, and how it meshes. I believe, when there's a good interaction between the public sector and the private sector, everybody wins. Certainly for certain type of projects, you absolutely need the interaction and the support of the public sector. I moved to Florida, to Miami with my wife, remarried. My kids were here, my 2 boys, Max and Ethan. And, we live in Miami. It's just before the pandemic. We sort of like time it almost perfectly. Some of my friends would say a little bit too suspiciously perfectly. We sort of like unpack and then boom, pandemic happens. And it was certainly much, much easier to pass it here. So, we're grateful for that. But we're here as well, my wife, Marika, and our 2 daughters, Victoria and Daniela. It's a lovely place to be. So today, and for the last 7 years, I am the CEO of Astor Realty Capital. When I moved away from the advisory side of the business, sometime around 2014, I decided to kind of like put my money where my mouth is. It's great to be an advisor and tell people where they should put their money. And it's wonderful to see how a lot of people are making great success with those type of advice and so on. But I decided to switch and pivot and started my own private equity, Astor Realty Capital. So we started in 2015. Ever since, we've created wonderful partnerships. We are now institutionally backed by a public company. That's the majority of our capital comes from. But we have not forgotten our mission. Our mission was to allow our friends, our family, the local Joes, to be able to participate in great transactions, great institutional side transactions, real estate deals, and do it sort of like with small capital, relatively small capital. And so we have today just about 200 high net worth friends and family individuals that are very consistently investing with us. Of course, my own capital and our family's money is in every deal.
Hey, that's awesome. I appreciate the color and just how you got to where you're at today, and numerous things that were in your path that helped really train you, right, to bring you up to where you're at now. Not just in 9/11 and being in that town, working there in real estate while all that was going on, and then you took an analyst position, and then you started placing debt, and all these things. You created your own advisory firm. I love the experience, right? The training that really you took on as you grew in this type of business. One thing I wanted to jump into though is even before we were talking about before we started recording that you claimed as your superpower, and I feel like I personally want to learn from you in this, and I want the listeners to think about this as well, and how important this skill is that you elaborated on before we even started recording. I thought it was so unique because it's not. I think I agree that it's so important. However, it's not talked about very often, right? The importance of this. And, let's dive in there first. And I want to get into some of the, the risk mitigation and some of those things that you're looking at right now, as you're analyzing deals, because, you mentioned y'all are looking at like 800 projects a year and certain things you all are going through. And so I want to get into that. But I felt like this superpower is so important, and you're in the business of private equity, right? And most of us are raising money, right, from investors, and we're doing all kinds of different things in this business. And I felt like this superpower is something that I want you to elaborate on. But let's dive in right there. What would you say your superpower was? And let's dive into that for the listeners a little bit, and myself.
Well, it's certainly not flying through, jumping between buildings. I think my superpower is.
I thought that's what they do in New York.
We tend to do it. In certain businesses, you kind of have to. My superpower is the ability to listen. So I listen very, very intuitively. And that might sound kind of like trivial. Everybody thinks they're listening, but we don't. We kind of like, when people speak, we're already kind of like formulating our question in our heads, and that's not quite listening, right? And so in my business, in the private equity, we choose partnerships. We choose partnerships every day, so we can analyze the risk. We really are great at analyzing risk. We manage, really well markets and conditions and externalities. By the way, the one thing I don't want to manage is political risk. Okay, we're kind of like divesting away from areas where we can manage political risk, but that's a different conversation. But our job is to make a bet on who we're putting the money with. We're creating joint venture partnerships. And so I typically look at what I call the triple C, right? What sort of collateral do I have? So that's, we go into our analysis. What sort of collateral do I like? The market? Do I like the asset class? Is that the right asset class? Am I building a luxury in an area that I shouldn't? Is there oversupply of certain what is the demand factors, that sort of a thing. So we can manage it fairly well. And that's what we're doing, and we're doing plenty of that. And then I look at, the credit. Can I actually get bank financing? Can I raise capital for this type of a deal? Is there a demand from investor side, from institutional side to this type of a product? And understand it from that point. And then the part that people tend to miss, because they're so highly focused on the real estate, highly important, they're so highly focused on making sure that they have the capital, they miss the character. The triple C is essentially collateral, credit, and character. And for me, the character is probably the most important part. And the character is not tangible thing. It's not empirical data that you can put your finger on. See, I came from New York City, and I've done probably over 400 transactions, been involved with probably over 1,200 transactions as an intermediary between banks and borrowers, as an intermediary between sellers and buyers. I've always kind of like seen the best of people, but unfortunately also seen the worst in people. And so over time, in this market, New York City, which is really the most competitive market in the world, you learn to listen. You learn to intuitively listen, like really pay attention, because people will tell you everything you want to know. Everything you want to know. You just got to ask, be able to be focused, ask the questions, and let them speak. Listen, don't interfere. Don't finish the sentences. If somebody left a sentence that is kind of like open for your own interpretation, and we do that a lot, we finish sentence, we don't even pay attention to that. You'll say something that's a little bit convoluted to continue the conversation. I'll finish that sentence in my head. Explain to me what you meant. No, don't do that. Be clear what the intent is of on the other side. And so I've developed that skill very, very carefully. And today it serves me well because we deploy anywhere from $60 to $100 million annually with multiple partners on multiple projects. We're managing over 3.6, 3.7 million square feet on multiple states and multiple cities, multiple markets. And we deal with multiple individuals. And the conversations, before we actually make decisions, and of course, we also rely on other data, but the conversations itself are a key element for me to make an investment or to choose to walk away.
Speak to any ways that you can grow in that, right? Learn or create that skill set. I know experience is a big deal, right? I mean, there's nothing like actual experience, but are there ways that you've kind of perfected that craft outside of actually having those conversations and just from experience?
Absolutely. Go and pick up some books. And I like to listen to books. I travel a lot, so I listen to books when I travel, especially when I fly. But NLP is a very, very important tool. Neuro-linguistic programming. Pick up anything you can pick up about NLP. Neuro-linguistic programming. Understand who you're speaking with and what's the body language. Think about communication between people, right? It's interesting that communication is divided into three major categories, right? The body language, the tonality, right? The tone of voice, and the spoken word. Everyone's focusing only on the 7%. The 7% for our conversation is only the spoken word. 93% of everything else in your communication, we're animalistic. 93% is your body language and your tonality. So think about it. We, as the human race, it started communicating ages ago. Our DNA has already been designed. Language came much, much, much later. And so we are communicating without communicating. And a lot of us forgot to pay attention to that side. Think about a sentence. You could say something and mean the exact same thing, the exact opposite thing. I'm not hungry. I'm not hungry, right? I'm not angry. I'm not angry. It says the exact same thing, right? But it means very, very different. And so that's kind of like on a very surface level. It goes much, much deeper than that. And I don't want to confuse the audience with it, but I highly recommend NLP, neuro-linguistic programming, pick up some books, learn about this, and it's fun. It's fun to communicate with people and to see how people truly communicate. What is it that they're trying to hide? What it is they're not comfortable in sharing. All this information is available to us, especially in business. You have to listen to that. And secondly, intuition. Listen to yourself. Listen to your intuition. If you're sitting in a comfortable environment, if you're talking to a partner, a friend, a banker, it doesn't matter. You'll have a feeling, you'll have a sensation. If the sensation is negative, uncomfortableness, your shoulder perks up, your body, your mind are communicating to you, something here is not right. Something is not right. Pay attention. Sometimes you come into a meeting and the meeting is just fantastic. The vibe is just great. You get each other. Okay. There's a lot of other tricks we can go to, which we're not going to do now. But there's so much of that. And that type of communication is extremely important. So I highly, highly recommend NLP.
You've piqued my interest. I want to look it up myself and learn more. I agree with you. All those things can tell you so much. I know I used to be a police officer, and those things really matter to us, right? Every time you're getting out on the roadside with a different individual, or as a federal agent as well, you're always analyzing body language. You're always watching what they're doing, right? Outside of what they're saying, you have to be paying attention. It means so much. Their body language is telling you, what are their hands doing? Where are their hands? What are their shoulders doing? What else are they looking at other than you?
Are they nervous? A person could be nervous for a number of reasons, right? But, sometimes it's the wrong reasons, all kind of different things.
I wanted the listeners to hear that, and myself to be able to pique our interest there so we can go do some of our own studying there. But while we still have a little time, I want to still dive into some other things because you all are looking at so many projects, and I want to dive in there. Everybody's concerned about the real estate market, right? And, real estate values, and a lot of places are dropping, right? And wondering if they should wait, if they should, how they're looking at different markets. Should we wait? Especially a lot of past investors right now are scared, right? And should we still invest right now? I'd love to dive into that for a moment and get your take on how you all are looking at those markets, or how even specifically how you would advise, say, passive investors right now, to look at the current market. And I know you're looking at a deal by deal basis, market by market basis, but let's dive in there to help the passive investor so they can think through that as well.
Sure. So, it's always the questions in our mind. Where's the market? Is this a down market, up market, sideways? Right. We always have to, be conscious of what's going on. So here's where we are. And it's always, everyone's kind of like, Monday morning quarterbacks. We're always smart in hindsight, but here are the facts, and I think I'll give the facts, and the audience will be able to sort of like make their own conclusions. And I'm not going to say what mine is until the end. But looking at the peak of the market was in fact in March, right? It's been a little bit over a year now since the market has been in a decline. In fact, we're in about 14 to 15% nationwide drops in values, 14 to 15%. Now, as an investor, the question is, you don't want to paint United States real estate with one big broad brush. That's just not going to do you any good. Look at your market and look at the sector that you're in. So certain sectors are certainly doing much, much better. The drops in values have affected all sectors, obviously, multifamily, logistical centers. But some sectors have been hurt tremendously. And we're seeing some colossal defaults, but some of the biggest players, right? Just the other day, I think Brookfield announced a $1.2 billion default on about 7 office buildings from New York all the way down to San Francisco, large office buildings. RXR returning back the keys in New York City and other locations on office building. The list goes on. Blackstone is not immune, $1.7 billion by another large company, also in the office sector. So the office sector in certain markets is, heading into a disaster. I mean, we're watching something very, very severe that's happening right now. Recently, Silverstein Properties sold an asset on Fifth Avenue in Manhattan, a great spot next to Times Square, Fifth Avenue, at a drop of about 45% from its purchase price. So 45%. And these guys are, they're kind of like the best of the best, all those companies. So imagine what happens to the mom and pops. Imagine what happens to the smaller companies, they don't have that type of access to capital. So if you're looking into this sector, the office sector, be very, very careful. There's probably going to be additional drops, and we're not over. It's not over yet, right? Now, having said that, if I'm in an office building right now in a place like Miami, right, it's a very different conversation, right? Numbers are going up. We're talking about, low 90s to mid 90s occupancy. We're seeing, quarter over quarter demand supply cannot even find an equilibrium point. We're seeing, rents approaching $150 a square foot, $200 a square foot. And I don't think we're over yet. There's amazing product that's coming online, and it's going to be the kind of product that people are looking for, experiential. So the idea is what we used to have 10 years ago and 15 years ago with retail. The issues where we were looking for experiential retail. Today, folks are looking for some sort of experiential office. Set this aside. If you're looking into the multifamily, which is a much more stable sector, then I think we're looking at, a pretty good allocation of capital right now. Not in every market. You look back at a place like Miami, which is, it's firing on its own different engines. In Miami, if you'll do the research, you'll find that there's about 20 potential renters. 20 renters for every available apartments. Now, that's a strong market, but it also comes with a price tag. We're operating in Miami. We have over 1.5 million square feet just in this market alone. So we're very, very fine-tuned to what's going on here. Now, do I want to invest in Miami right now in multifamily to buy an existing building? Probably not. Okay, I'm not that type of a guy. Texas is a great market for us. We love Texas. Texas is kind of like showing the stability and the strength, especially around the Dallas area. But it depends on what sort of a sector and where you are. If I'm in Austin, I would probably stay away. Austin is seeing too much supply, and then we're seeing drops. If I'm in residential, in Phoenix, Arizona, in the surrounding area, I'll probably stay away. In Phoenix, we want to be in a hotel. In fact, we are building right now. We're participating in the first non-gaming Caesar in the Scottsdale's market. So, the ADRs and the matrix and the fundamentals of the hospitality, the lifestyle hospitality in Phoenix, Arizona, and specifically in Scottsdale, are we breaking records? So it depends where you are. You have to be very conscious of what's the supply-demand drivers and what's coming. Now, nobody has a crystal ball. I don't think that we're at the bottom. I'm sorry. Let me rephrase that. I think we're reaching the bottom. Okay, with a 15% drop, I think we're reaching the bottom. I believe that we're still going to see some drops. Certain markets, absolutely yes. Other markets, not yet. Miami-Dade, south of Florida in general, has not seen the drop yet. However, it's coming. And why do I say it's coming? Because we're seeing drop in activity. There's a drop of about 40 to 47%, depends on which market you're looking at, in activity of condo sales and home sales. You haven't seen the drops in prices yet. There's a lot of capital that's coming to Florida, specifically to the south of Florida, and we're expecting to see some sort of a break, some sort of a give, right? Because it's always supply and demand. A drop of nearly 50% in activity without a drop in price means that the drop in price is sure to happen. Now, I'll give you something from my years in this market and about cycles in general. In New York City in 2007, we were like in an unwavering, we were talking about a party that was going on. Nevada, Arizona, everywhere was dropping. Florida, dropping. Everything was dropping quite significantly and quite fast. New York City, not a beep, nothing. We were still moving. Transactions were almost at volume 2007, and we know exactly what happened, but a year after in 2008. So I'm sitting and I'm looking at the Florida market, and I'm thinking, this is for me 2007 New York City. Florida, it's coming. I don't know if it's going to be a very deep drop. But just like in New York, we were the last to come into the recession. We were the first to come out, and I think that that's what will happen, both in Texas and in Florida, South Florida specifically. And so, as an investor, where do I want to be? Well, opportunities are coming, and for the most part, opportunities are here. And those opportunities are essentially coming because banks are pulling back. Think about it, an investor, right? You have less capital available to you, less sources of capital. If you look at, on a larger scale, the CMBS market has pulled back. It's down to about 25% of activities in the last 10 years. All right, so there's less of that. Regional lenders, national lenders are pulling back significantly. 57% of all lenders are saying that they're tightening their underwriting criterias. And so there's less of that available. People need capital. And it's really at the bottom line, like Milton Friedman, the great economist, Milton Friedman once said, it's all about the money supply. And what we're seeing is a retraction of the money supply. There's a lot of fear. For me, this is the bottom or close to it. We'll probably have another 5% to go. Certain markets, there's going to be a bigger drops, but depends on where you are. This is the time to look. We were disciplined for the last 10 months, right? Since the summer of 22. We're seeing erosion coming, erosion of values coming. We're very, very disciplined to stay away from the market. We've spent a lot of time on asset management, looking into deals, but not transacting for about 10 months. It's not simple. But we're starting to see deals come back, and we're starting to see a lot more opportunities. As an investor, I urge you all to start paying attention to the market and start getting ready. Get your dry powder and start getting ready, because opportunities are now, and it's not going to last for too long. The markets have been correcting themselves. This is not 1995. This is not the 1980s. Markets are correcting themselves super quick, and by the time you'll turn around, and if you're waiting for the headlines at the Real Deal magazine or Forbes, it's going to be a little bit too late. So jump in now, be ready to deploy, be ready to participate, because the opportunities are now. And folks that are ready will, they scoop them up. So get ready.
No, that's well said. I wish we had another hour to talk just about that, but we don't, unfortunately. Looking back over the last, let's say 10 to 12 months for us, it's been really slow. Just almost no acquisitions. And in the moment, it's kind of discouraging, right? But looking back now, I'm so thankful. I am thankful that for how that worked out. And, we just couldn't find anything that made sense. And I'm thankful we didn't think anything made sense. So, but looking forward, man, it is hopeful, and I'm excited about the opportunities that are ahead, like you're talking about. But I wanted to, we're going to have to move to a few final questions in just a moment, but I wanted you to elaborate on one thing that you said as well, because you just briefly hit it earlier. But you said, moving away from places that you cannot manage political risk. What does that mean to you, just briefly, before we have to move on?
So what does it mean for me? I'm just going to be like I know how to be. I'll be very, very straight and to the point. I'm a great believer in New York City. I built my career in New York City. I was involved not just on the business side, but also on the political side, helping the state go through and advising them on a variety of matters that are affecting the public as it relates to real estate. What we're seeing today is more and more of a political headwind and a very, very strong pull that is in direct opposition to businesses. It's gotten extremely tough to do business in New York, especially if you're in the real estate, especially if you're a landlord, if you own a property. And a lot of those guys are great guys, a family operations, the mom and pops operations, and then the rules are always in oppositions with what they know to be. So it's very hard to manage a business like that. I don't know if I can take a risk like that, where today I think that the rules are X and I operate according to those rules, and then some council members of this district and that district will jump in and start pushing for a bill that will literally erode values and take them away from me. Give more power to my tenants on the back of my hard labor and my hard-earned money. It's very hard to operate like this, and you see it in certain markets. I think that San Francisco, for me, is a market that I love. It's a great place to visit. It's a wonderful town. I love people in San Francisco, just like I love my New Yorkers. They're all my friends and my family. But the political risk, for me, it's too much to bear. So we can manage everything, but I don't know how it's going to go with the votes. And for that reason, we'll go into New York, and we have a lot of actions in New York, right? We have a lot of action. We just finished a 100-unit condo building. We're about to exit another condo building, but we do condominiums. And I try not to go too much on the rental side. And if we're doing rentals, it's only going to be the kind of rental that we will build, stabilize, and sell. We sold an $86 million deal in Queens, New York. Beautiful transaction. JP Morgan was the major equity player there. So there are sections where I know how to manage it without going into areas such as rent stabilizations and rent controls, because there's just too much there.
That makes complete sense. I mean, just thinking through where you're investing, right? And what's happening politically, how does that affect your business in a big way? Joe, I wish we had so much more time, but we're going to jump to a few final questions, just some quick questions. But what's your best source for meeting new investors right now?
My best source of nearing new investments in investors. I signed up with a few groups that I think are quite fascinating for me. So the majority of our investments, of our investors today are sort of like word to mouth. One friend brings another,
Sure.
and so on. We've never been very big on social media when it comes down to it. We sort of like relied on the capital that we were able to bring on institutional sides, and that's always been plenty. And then we always leave a side traction, a side amount for our friends and family and the high net worth individuals. And that sort of like creates and propels its own. But we teamed up with the Family Office Club. Now, it's a very interesting group of guys. It's a national group of guys, great people. And they tend to sort of like congregate, bringing in family office members, private equity like ourselves. I meet a lot of, folks looking for capital and also groups that are looking to deploy capital, but are not sure who to deploy it with. So I think those guys are great. I've also teamed up with a private equity club called JT Fox. Okay, so those guys are also fantastic. They're super dynamic. I really enjoy being part of it. Sometimes they pitch all sorts of deals, and when they pitch real estate deals, I get to participate more and bring my 2 cents of advice. So I love these guys. So they're pretty amazing. Met tons of great people there, and no doubt some of them will turn out to be my investors. It's sort of like organic for us, it's very organic. People know us, we never we're never a hard sell. When I offer my investors over 20% a year on a consistent basis, I don't have to hard sell. If this is not for you, maybe something else is. Right. And then when we raise capital, we typically get to be oversubscribed, but in a very short period of time. But I enjoy the interaction with people. I meet with each and every one of our investors before we onboard them, and we have a conversation. They get to meet us. They get to ask me questions. I'm accessible to everyone. So for us, it's organic. But those 2 groups I highly recommend. So the Family Office Club, JT Fox, look them up. I think they're fantastic.
Awesome. Appreciate you sharing that. I've known Richard Wilson for a long time now, and Family Office.
Wonderful guy.
Yeah, really neat group there. But I haven't heard of JT Fox. I'll definitely look them up as well. What about Joe? What's some habits that you are disciplined about that have produced the highest return for you?
Habits that I'm disciplined about. It's easy to fall in love with bright and shiny objects. And you got to remind yourself that you're there. It's a means to an end. You're a custodian of other people's money. You're a custodian of other people's trust. And so not always the bright and shiny object represents the highest return, the highest reward to risk return. And so you really, really got to kind of hold yourself tight. I know the rendering looks wonderful, and we all want to have a piece of this city, and we'd like to enter there. And we've been sort of like circling around that particular, geographic area for over 2 years, but it's not it. And we have to wait. And so saying no and knowing to say no and saying a quick no, I think is a fair approach to things. So my discipline comes around making sure that we don't go after bright and shiny objects. We go after something that is solid, right? Solid return and preservation of capital, which is really our most important element here.
Yeah, ability to say no. That's important. That's hard for me as well. What about how do you like to give back?
How do I give back? I started in the pandemic in 2020. I started a real estate education course called the Real Estate Masterclass. Very quickly it became a national disruptor because I've done something very, very unique, very special. I went out to my contacts. Some of them are the biggest real estate players. I'm humbled to say. Folks like Sam Zell, folks like Ethan Penner, and those of you who don't know Sam Zell, Google it immediately. If you're in real estate, you don't know Sam or you don't know Ethan Penner, Google it immediately. Now, let me go into it anyway. So Sam is the godfather, I call him, of real estate transaction. He transacted the largest real estate deal in the history, probably of private equity, but certainly in the history of real estate, $39 billion. He sold equity office to Blackstone, and they chopped it off. And so the story went. He also did it in a very interesting period of time, right before the big 2008 crash. right? So Samzel and others like Samzel, I sort of like, encourage them to come in and we work together to create this phenomenal course called the Real Estate Masterclass. I've done it together with a partnership with a group called Urban. That's sort of like my way to give back education. Teach a man how to fish is a little bit better than giving somebody a fish. I know it works backwards also, but that's my give back.
That's awesome. I look forward to looking that up, or maybe we can link to that in the show notes as well, so everybody can find that. Joe, it's been an honor to meet you and have you on the show. I love just hearing about your experience, but then your focus as well on the art, or the ability to listen well, and how you focused on that and how it's helped you in so many ways. I completely agree. I would love to focus on that skill set myself and get better at that, especially with all these interviews. I think it would help the listeners too if I could get better at that. But grateful just for your, just your transparency too on how you all are looking at markets, how you're looking at investments, and diving in there as well. How can the listeners get in touch with you or learn more about you?
So they can always go to astorrealtycapital.com. astorrealtycapital.com. You can always reach me through JB at Astor Realty Capital. Just Google me, Joe Berko. It'll pop up in plenty of articles. I tend to show up here and there on conferences and speak and participate. I think there's probably the best ways. And, if you want to reach set up an appointment, have a chat, Laura at Astor Realty Capital will also be a good way to reach me through my office, through my colleagues.
Awesome. That's a wrap, Joe. It's into the show. Thank you so much.
Thank you very much, Whitney. It's been fun.